Welcome to the debate from MacroSpire.com. Before we begin, this content is for informational and educational purposes only. It is not financial advice and should not be relied upon for investment decisions. Past performance does not guarantee future results. Always consult a qualified financial advisor. Today we're asking, F.O.M.C hold, PPI 0.7% proves rate cuts are dead versus F.O.M.C hold, the growth collapse matters more. Let's hear from the hawk and the contrarian.
Producer prices rose 0.7% in February, more than double the 0.3% consensus. The Fed held at 3.50 to 3.75% anyway, and the dot plot still shows one cut this year. That disconnect is the story.
Wall Street fixated on the 0.7% PPI print today. Here's what it missed. GDP growth has cratered to 0.7% annualized, the S&P 500 is down nearly 5% from its highs, and the Fed just told you it still plans to cut rates this year. The market is trading the wrong fear.
February's PPI print wasn't just hot, it was structurally hot. Goods prices surged 1.1% on the month. Services costs rose 0.5%.
Everyone quotes PPI. Almost nobody is talking about the growth trajectory. Quarter 4 2025 GDP came in at $31,442 billion.
The 30-year yield at 4.86% is 14 basis points from 5%. A week ago it was at 4.72%. The 10-year rose from 4.12% to 4.23% in the same period.
February's PPI was hot. Nobody disputes that. But let's look at what actually drove it. Fresh vegetables surged 48.9%.
The median dot still shows one rate cut in 2026. That's delusional. 7 of 19 F.O.M.C participants, more than a third, see no cuts this year.
The 30-year at 4.86% reflects a consensus that inflation will persist. The 10-year at 4.23%. The 2S10S spread at plus 0.55%.
The parallels to the stagflationary 1970s are no longer hypothetical. Then, oil shock plus accommodative policy plus fiscal expansion. Now, oil above $119, USO near 52-week highs, a Fed that's cut 175 basis points since September 2025 despite persistent inflation, and government spending showing no signs of restraint.
The dot plot still shows one rate cut in 2026. 7 members see 0 cuts. That means 12 members see at least one, a clear majority.
The Fed held rates and pretended one cut is still coming. The PPI says otherwise.
The consensus trade after today, short bonds, long the dollar, forget about cuts, is the crowded trade. And crowded trades unwind violently. Two very different takes. The hawk and the contrarian, thank you both. What do you think? Let us know in the comments. Read both articles in full at MacroSpire.com. Thanks for listening to the debate.